But why don't we get back to the macro perspective, what we saw at the end of last week and what we're expecting to come. We're joined live in studio by Pete McGuire from XM Capital. Morning, Pete. Thanks for coming back and joining us on this Monday morning.
Good morning, Daniel. Good morning, Ingrid.
So we're watching the markets. We're expecting a little bit of a softer open here in Australia, but that's before we've had all of these numbers drop here. But if we look at it from a wider perspective, are we going to expect the same sort of volatility ripples play out in global markets this week?
I wouldn't be surprised. There's not a lot of news coming through. Let's see what the FOMC says as far as those minutes, and of course what their guidance is moving forward as far as the September viewpoint, because those coronavirus deaths are increasing in the States. Though if you're looking at the big macro picture, I think there's a lot of uncertainty with Eurozone as well. So where does the US dollar play? What happens to the underlying hedges being gold? And that creates, I think, that volatility opportunity for traders.
What are you watching when it comes to the election, which is obviously coming up, getting closer and closer? We've got
Sure.
Biden's running mate now, and there's a lot of talk about that. Does this have an impact on dollar moves, on equity moves? I mean, what's your view? Fixed income?
I think first off, fixed income will probably creep higher from here. If you're looking at the other side, of course, the uncertainty leading into the election, where does Trump play? What does he do as far as these China-US trade talks? That's been postponed, so what's the momentum there? China, I just noticed Trump is certainly not backing back, and that's in news just hit the wire then as far as his attacks on China. So I feel as though that it's no good being aggressive at the start of October. He needs to do something pretty much from September onwards if he wants to go on to that platform to create that uncertainty from an election standpoint. And the coronavirus numbers, was it a gain of function test that went awry, and is that where he's going to play?
Is that where the volatility is going to be in the products that have seen it the most till now, though? Is it going to be manifested in the physical commodities? Is it going to be in the equities, which are now testing record highs in the US? Where it's going to be?
I think there could be an equity sell-off, but I feel as though that firepower has just been so significant as far as stimulus, and whatever's needed will be done to create that momentum moving forward. Many analysts are saying 21's even going to be stronger as far as equity momentum. So record low interest rates, strong surplus, strong stimulus from all central bankers globally, and that's not a bad sign for equities. So I think that onward and upward, but I wouldn't be surprised to see that US dollar come off a little bit.
What are you watching when it comes to oil? Because we always love to ask you about oil, Peter.
What I think, Ingrid, is there's no conviction either side of 45 or 40, so it's range bound. The only way you can make money out of that is option strategies. So there's no clear indication that we're going to see a $50 handle very shortly or a 35. So whilst it remains range bound, I don't think fast money's finding that home. The fast money's been earned off it, certainly in March, April and May. Now it looks for other opportunities, and that's just the nuts and bolts of oil trade. I can't see anything dramatic unless you saw a spike in geopolitical or weather outages.
From the perspective of how we look at the US yields and how that translates into global asset prices, we saw a pretty weak auction of the 30-year late last week, and it was really a demand-supply function, and people use this to determine how to price future growth. Are they going to look at this weak auction as a standout, or are they going to keep using their inflation targets to really price assets?
I think it's both. And when you're looking at the inflation targets moving forward, unless you can get over that 2% for the US, it's going to stumble. So, and how do you get that without high energy prices? I think the consumer's not in a bad place in a lot of ways if they're earning a paycheck, that is. So I can't see really any sign that we're going to see above 2% in the short run, maybe even out to 22. So that seems to be the dilemma from the yield side, and from the growth side, what happens to US dollar is the mainframe to really create that level of uncertainty against the yen, against the pound, against the euro. They're all seen to be very toppy at the moment. And is that US dollar going to come off further?
And then from the perspective, just to sort of wrap it up here, we've seen the New Zealand election now officially postponed by 4 weeks. Is there any chance that the US is going to pay attention to this type of paradigm playing out and even consider re-timing their own election?
Well, I'm not sure what President Trump can do, but I do know that he's attacking from a postal side. Are the states going to be along the same frame as far as that delay in postal votes coming through? And I think that may be the platform that he's prepared to push hard on, because he believes that it could take days, if not weeks or months, to actually get a final result. So that creates, again, uncertainty, and it may go down the same agenda or the same pathway as what Jacinda Ardern's mindset is.
Absolutely. Well, I don't think there's any sort of dual thought when it comes to New Zealand's decision there. There's no political gamesmanship taking place, but we'll be watching very closely with the US election and the US markets. It's been a pleasure as always having you join the conversation, Peter.
Thank you, Daniel.